Welcome back to Trader Sage, aka Trade and Wait. Just wanted to highlight a trade I just took, and I kind of thought about like how can I how can I explain this setup when it's off the 15-minute, oh, it's off the 4 hour, right? Seeing that it broke through this with so much force, gap down. Um, so we start there. These are just ATR channels, 3 ATR, in a deep discount. And we broke through this fair value gap that's here, and this is the target. 3 ATRs is a lot. 5 8, this is a 5 ATR channel. Here is, look, you can see like when's the last time price made it to a negative 5 ATR on a 4 hour is highly unlikely, right? It goes to the 3 and does what it do. And we was at the 5 here. Then you can see the reaction of price and then turn it back up. Yeah, it's not like even here it got close, so it extended past the 3. You can see past the 3 is overextended past the 3. Got close to 5 here. And let's see, positive 5 is just as rare. Positive 5 ATR for the weeks that we are reviewing, it's not as common. I just wanted to throw that out there, but also context. These ATR channels had nothing to do with the context for the setup. It's more about market analysis, right? You don't have to. You could use indicators outside the market and not use it inside the market. That's doable, right? To test your trade variables, right? Like how could you have improved on the trade? Like what do you see in price action that the indicators pointing out? Because the indicators, they all are like representations of price itself, right? So whatever one, it may confuse you during the market, but it may shed light outside of the market, right? Without the additional stress or whatever. Um, so that's the 4 hours based off the 4 hour gap down. Oh, we can like highlight that too, right? Because you can highlight that as well, right? Like this was Friday, 1400-hour candle, the 2 p.m. candle, 2 to 6, but obviously the market closed at 5 p.m. All right, so here we have price retraced into the 20 EMA market structure shift. It held below this -1 ATR into, this is an old weekly low. Ooh, it's way back there. It's not even the low of the week, but a swing low. Thought that was relevant. Likewise, this one here will be to some degree relevant as well. Possibly, right? So boom, right? We're gonna do that. Obviously wasn't there during the time prior to this video. This wasn't there. Everything else was. Except these ATR channels. But because I looked at it the previous day, like Friday at the end of the day. Okay, so like this is like proving that the market is still weak, right? And Friday kind of like tapped this intra-week low, tapped it, no strength. And so yeah, so that was a target off the rip, right? To see market gap down, taking this out. Now that we see it there, taking this out, and for me, it was like, oh, a gap down, a bullish fair value gap that's in discount, so it should be kind of strong. Should have been to some degree stronger or held price back a little better than that. But back to the setup. All right, so we gap down below this weekly low, gap down below this 4-hour inverted fair value gap now. And obviously this is like, oof, I can like, had grabbed it here, that would have been wonderful, right? Let's see, would you have trusted that on any time frame? Go all the way to the 1. Okay, look, it held below, gap down with speed. Like this, like it is, you probably wouldn't take it. Or you probably would have been like, you know, but that's like an open and drive play. Open and drive play, like that open and momentum. So you get in, you get out as soon as you see signs of weakness, right? What I came here for. Let's see. I'm not in the market, so I get to play with indicators. All right, so yeah, so here, this would have told me, this would have green lighted that move. Without like any doubt, any hesitation, right? Take this, right? So gap down, everything's everything. It's a little suspect though. I don't like that. It's confusing. But hey, look at that, man. Like, come on, Tim. What are you telling me right now? The trend is bearish, but there's some strength. And there's some strength. And it's consolidated. Like, no, I don't want. But yeah, sometimes these indicators are confusing. Leave them alone. They are crutches. You should be able to. Oh, don't leave them alone. Do what you think is best for you. You know. All right. So back to this setup. I kind of like jumped the gun, right? So let's take that off because why? All right. So we have our levels, and this is technically an imbalance, right? It's an imbalance. It's treated like a fair value gap. Sell side imbalance, buy side inefficiency, right? So we have that swing. So the price traded into internal range liquidity. So internal range, external range. So you see the market like engineered liquidity though. So got this. It's not a swing low on this time frame. It's a swing low later. But the series of down close candles, I can see the swing low, and that is a swing low, right? For me, I can see that as a swing low. So internal range to external range. So this is the target. Longer range target would be 65.82. But this is the reason that got me into the trade. So once this happened, plus the run above these relative equal highs. Should I write on that? I don't want to write. All right, so boom, right? So consolidation on this time frame is ugly too, right? Running a swing low. You'll see later, if anything. If you see it, if I bring it up, then we talk about it. If not, we just, doesn't matter. All right, so the 5-minute chart. This is everything we highlighted there except this fair value gap that's right here. I kind of eyeballed it, but it's this this low. No, this it's on every 6, every 3. So all right, 2, 3. All right, so this would be candle 12, candle 13 is the reason, and it's at 1900 hours, 7 p.m., which is the start of the Asia kill zone for me. I think we calculated this as a relative equal low, relative equal highs. Price ran above. We have a market structure shift here. This is a 5-minute chart, so we have a market structure shift. Where is the market structure shift? Below here. market structure shift. So we have a run on stops. Just go ahead and buy side liquidity rate it. And that should be blue for me. I think this should be blue as well for me. Right? So we have these highs ran. We have these relative equal highs ran, buy side liquidity rated. We have the market structure shift below this swing low. Really like below this swing low because the gap is here. But we have another swing low, lower low. Price runs it here, retrace, and say retrace into here, go back again, and then this pullback is the entry because you have this nice imbalance here. So I didn't use this for the trade, but we might as well use it now. I'm using a body. You low key can use body to body, right? Because you can. So you have the entry. You can see what happens. You use wick to wick in this situation. 50%, you have to accept that, right? You have a high, low, higher high. So we have a breaker here. We have a breaker here. You wanted to highlight that. You don't have to. If it's not clear, also, let's see. Let's do something like loud and courageous, right? Let's see. It looks crazy, right? Looks like it's not anything there. So look, this is, I only dropped down here so we can see. It looked like it got the chicken pox or something, but you know those are numbers, right? Having a little fun, man. Anyway, so we see that 5-minute breaker. Well, price is pretty much like respecting that, right? Anyway, that didn't get me into the trade also, but it could get you into the trade because one person doesn't use it, then the other person can. So where is my, all right, let's just draw that out because I don't know where my other red line went. Oh, I was doubling it up with this one. All right, so we got our 5-minute bearish fair value gap. So this was the initial entry. We had another market structure shift here. The low key 3 drives pattern, 1, 2, 3. Right, or 1, 2, 3. Right, pull back, fell below the midpoint. The consequent encroachment of this imbalance. We have an inverted fair value gap, which makes this a balanced price range here. I didn't see that initially, so let's fine tune that. A balanced price range, that's even more accurate. Let's look at that. Holding below, right? The wicks, the bodies tell the story and the wicks do the damage. So we have this short lead out, 3 drives pattern, 1, 2, 3 below this liquidity. That's technically a completion of a sell model, right? 1, 2, and then boom, right? That's a completion. This got me out of the trade. All of this I wasn't here for, I believe. I think I wasn't here for, yeah, I think I got out like over here. 1-minute chart though. But yeah, 5-minute, it looks like it was sufficient to stick around on the 5. Everything's here. But yeah, I would have took out one of these, this longer wick, and just use this shorter one here. That would have had me at optimal trade entry. You could just use body to body, which is like how I was taught. You use body to body like how it's taught, right? Don't have to reinvent the wheel, right? So it's just this body's high. This is a swing high. And this is a swing low. This is the lowest body. Optimal trade entry 61.8. All right, entry here. So you have one entry here around these lows. Almost made it to one standard deviation. Pull back, return to origin. I used to not know, like, what do you mean by return to origin? I'm looking for material on what is return to origin? Like, what is that? But it's literally, that's obviously it's a return right back to your entry, like your optimal, your ideal entry spot. So obviously it didn't return back to optimal trade entry, but it returned back into the imbalance, the violated balanced price range. Well, it's a balanced price range, so the likelihood of price going back above here is reduced, right? But you don't know a balanced price range, inverted bullish fair value gap. Me, that's stronger than a bearish fair value gap or this displacement. This is a sign that, hey, price is some measure of volatility here. But trading below here is a clear change. Like, this is like confirmation for this. Totally violated here. Optimal trade entry low key calls for two standard deviations and get out, right? Like, this is the target, Asia low for now. And the ultimate target's here. And that's almost 4 standard deviations. And that's good money right there. So 15-minute, the higher time frame, this kind of gave us the green light to go and look for a setup. For me, right? If you like a turtle soup, smart money reversal person, here you go. Even that, right? But you got like a 3 drives, a 3 steer type pattern here. 1, 2, 3 drives pattern into into what, right? Into here, I guess. This is also like this is balance, and this area here is balance. It's the wicks and the bodies. I wonder what that looks like. I don't know if this is a PD array or what's it called, but let me just show you. This is the lab right here, man. Not really saying nothing. You can make it say something, but why, right? Let's see what that little wick does. Let me stop. Split that into quarters, and it might be a little bit off. Okay. Price 66.45.50. Its opening price is 66.45.50. I'm just holding the left mouse button to do that instead of going back up here. It's 66.45.50. So we know we have that accurate. And this is 66.46.75. 66.46.75. So that's definitely a PD array, right? Treat wicks like gaps. So price wasn't able to hold above the on-screen encroachment of this wick here. There you have it. Why did I shoot it way over here? I have no clue. No clue, man. But 66. But yeah, that's being really technical. Like, no, right? No, but you can do it, right? This was a reason to go short here. Obviously, is a high risk, high reward entry. It's a high risk, high reward entry. So yeah, this right here, you probably like hold your chest, probably like kick yourself. You're mad that you didn't get in this right here. It's nice. It's a good rush, right? 1 minute, 5 minute bars at that. Ate this wick up, causing a market structure shift. First entry, short, one standard deviation target. This actually, obviously these are targets too. Asia low still intact for now. For me, right? That's at 605, so it may not be yet your whatever you call it. I'm gonna call it what I call it. I don't even care. Like, who cares at this point? Um, so we have this shift below here, low bleed out here, running this liquidity, retrace back into here. So we adjust that. And it's this low, this high, optimal trade entry. Now we add target, this low to this low to this high. One entry, boom, retraced. You keep it here because this is where the imbalance is. Technically, you still feel like price, like internal range, yeah, like external range, back to internal range, external range, internal range. External's already been taken out. Consolidation. So it's external, then back to internal here. Do that. Be like, yo, if I would have got that wrong, I would have deleted the video, right? Like, who cares? Like, what you gonna do to me? Like, unfollow me? Who cares? Like, this is like a big journey. Like, this is a huge journey, man. A lonely journey too, right? All right. So internal range. This is external. Relatively equal. This was relatively equal lows at this point. Relatively equal lows here. So that's the target. Boom. Right. Kept going. Target 2. Optimal trend entry target 2 is hit. You can see here price broke this level. Or this level. Broke this level, retrace. Broke this level, retraced. Took out the lows. And I don't know what else we got back there too. But this is perfectly fine as targeted as levels. This is definitely completion of a sell model here. So we broke this level. We didn't retrace yet. So we got an imbalance here. So we can just go ahead, or we can immediately rebalance this to this low, or we can actually trade back into here. Then you just want to watch here because you think about support and resistance, turn back into here. Who cares, right? That's like all measured. That's like all measured. Everything was like measured. If you didn't want the plate, you didn't have to. You didn't have to eat it. You didn't have to pick it up. Like, it's just like, take your time. Take your time. So we had like showed a couple of things. It's pretty fun because some of these things I didn't see in the beginning, but the 15-minute internal range liquidity. So look, this is not all right. 15-minute. Took everything away. But anyway, we see like price trading into internal range. At this point, where's the external range? It's here. That's why. That's why I chose the Asia at that time, the Asia low, because internal range to external. Yeah, you can say down close candles, up close candles supposed to keep price lower, and I think it pretty much did that. Um, Kind of exciting though to see like yo, take it easy. Like the less you do, what is the thing called, man? Oh, here we go. 66.32. The closing price of here is 66.32. Come on, bro. 66.32, and the opening price here 66.32. So it's pretty clear here after internal range. After this was rated, I don't trade. Like I can't say I don't trade order blocks well, but I don't. It's not a go-to. It's not a go-to. I don't look for. Like I wouldn't have taken it. I would not have taken this trade on this time frame here. I had to go to this time frame at a minimum, but I also know that the 15-minute goes with the 1 minute. But you don't have to go if the trade setup is clear here. And this is why ICT in the 2022 mentorship, he has you go from wait for the run on stops, then you have to walk down. You start at the 5, then you walk down 4, 3, 2, 1, and you stop at the first one you stop at the first one that created the fair value gap. And that's the one you start looking for your entry on. Makes sense, right? But going here 5 minutes, yeah, is it here, is it not? I don't do the walk down. It's either gonna be here or it's not, or it's not gonna be here. If I don't see it immediately, then it's like, yo, you're reaching. This is even like more attractive, right? Like this is beautiful work right here. You can see it clearer now. This breaker too, breaker block. Anyway, 5 minute, you can see it better, right? More of a trend, downtrend. You can say here. Measure move, essentially. You want to say from here to here. Measure move, essentially, right? That's another reason to get out, right? And the time, this is another reason to get out. like give me a break. Like you can eat though. You can eat. You gotta monitor it though. This is this consolidation. This is like trash on this time frame. Like it's trash. Like I would not even consider it. But consider it here, drop down. It also tells you that hey, you found the trade on a 15-minute. You didn't find it on a 4 hour. So why are you still in it? You know? So we are on the channel. I'm so ridiculous, man. So we are on the channel. Well, that's that, man. Let's see. Oh, this is from, I think it is on a weekend. Saturday. This was the week. I don't know where we are in relationship to that. We did gap down. Did it gap into here? Good. That's too far down. Anyway, this is the weekly chart. You guys can play around with that. This is the same setup. Run on stops, market structure shift, retracement, internal imbalance, which is a liquidity void. So you have one entry here. You got to return to origin again. Second opportunity short and gap down. And we got another gap down because this is where this candle closed at. But we know we opened up, we gap down, so we're already below this previous week's low, obviously. All right, and this is the 4 hour. Right to the gap down. So this was on the radar, right? And we had this previous week's low. That's like some form of support here. What else? Again, -1 ATR. We already identified the trend as bearish. 1 ATR, right? 2, -2, -1. You'd expect like a -2 again, -3. This is where price. This is a divergence of this. Oh, stop talking, right? You say, look, right? Last time price was over here, was 3 ATR. You reach this level again, it's approximately 3 ATRs between the 2 and the 3. All right. The last time at this level, 3 ATRs. Last time this level, 3 ATRs. This time around these levels, 2 ATRs. Ignore me. So all right, we got news. Wednesday, 8:30. Thursday, 8:30. Friday, 8:30. High impact. Dose report, 10 a.m. So every day, Wednesday, Thursday, Friday. Earnings this week. I went to Twitter, grabbed the earnings whispers. Earnings releases report. For me, nothing is exciting here. Let's go check out Oracle, see what that looks like. Ugly, son. Oh. All right. It is ugly though. Hey, let's get rid of all this noise. That's what that is. Deep, deep, deep. Yeah, we have a liquidity void here. Retrace into there here. Drop. We have a inverted fair value gap here. We have this. Did this hold price up? This volume imbalance. Did that do that? Like, that's ugly, right? That's this is your leader? Like, let me stop. I'm just joking. But and it isn't a discount. Next, this is a weekly though, so. Oh, here we go. Oh, right. I mean, we obviously have this here, but I like what I drew. Yeah, I like what I drew, right? Like, so the weakest, you say, the weakest, like this, what I'm drawing out is weaker than a fair value gap. So, but it's a good magnet, a good target. It can be support and resistance, but it's weaker than a fair value gap. All right, so let's see. Oh, you playing me? You playing with me? ugly thing. Gaps. All right, 4 hour, same situation. Boom. We want to see if price holds above here. If it doesn't, if price holds above here. Actually, bada bing, bada boom. We ran above these highs here. We have a market structure shift. We have a retracement here. Seeking sell side. Inverted fair value gap here. Oh yeah. Oh, this is the 15-minute too. So got relative equal lows here. 1, 2, 3. We got low resistance liquidity run. It's possible that it can take out the previous, like, somehow that just made it noisier, right? These colors. Well, all right then. All right, where we at? All right, it's 15 minutes. Do we got to run on stops? We already discussed that. Uh, right back into here, right back into the Asia range. High, low, higher, high, breaker. But yeah, so you got the inverted fair value gap, breaker, drop. Take out that, bounce back, retested the consequent encroachment here, and slow bleed. And it's actually what? Mimicking the market, right? Let's see what the NQ is doing, right? Because yeah, NQ is and it bleed. Nope. All right. What you talking about? What you talk about? Yeah, you weak. Well, you strong. You're the stronger one. But we don't move until you move, right? That's how it goes. We will stop the bleeding until you are ready for us to bleed. Or are you going to hold us up? There's no fair value gaps in that 15-minute one, though. Like this time frame, so it's a balanced price range up here, though. Yeah, find out that's what caused you to go down. Anyway, we got DXY. Yeah, big bull boy. What you doing, son? Up there, you took that out. Previous week's high. What you gonna do? You gonna see what you gonna do, right? Actually below here. Holding below here. And if the market's not manipulated, holding below here will cause everybody else to go up. So let's see. Well, that's it, man. I mean, like that's it. Actually, what day is Oracle even reporting? Oracle's on Tuesday. There's no news. There's no news catalyst on Tuesday, like economic news. Let's see what happens. Because we do have other stuff going on in the world that can and will impact the market. Oh, let's check out CL. Of course you did. And where's this gap? Where's this? I'm sure that's a fair value gap, but where did it come from? Inverted too. What time frame did that? Where do you come from? I have no clue, bro. Oh, it's all labeled and everything. It's a quarter. Yo, come on, Sam. Where I get this from, though? That is not valid. That's valid. But I call it inverted. Where do you come from? You had to come from here. I didn't move that. Alright, so boom, bap, pull back. Validated. This is crazy. Anyway, this is the quarterly chart. Big bull. Like, regardless of like whatever system you follow, like this is a wedge break, right? Like you can do that. You know, like that. You can do that. Do this. Wow. Like that, or you can do like this. Anyway, that's getting noisy, and noisy does not work. All right. Yeah. So where we going? Up here? We already in there. We're already above this high. We're already in this balance. And this quarter is the last month of the quarter, right? Let's see what the month. Oh, we can go to the monthly balance. Yeah. So even if it pulls back and holds like above here, you know, it's already in the premium here. But we got this. We got this. This needs to go. Like, you need to go. Like, I don't know how. Like, you need to go though. This is crazy. And get snagged up in here. Right up in here. You get snagged up in here. We end up there. Explain that to your mama. Anyway, this is a 1 month chart though. We can see, man. And this is a ugly month, right? It's a climax bar, is it? Oh, let's turn on the lights. 5 ATRs, man. Look. What does that mean? What does that mean, right? Got close to 5 ATRs, pull back to the 3 and consolidate it. Back to the 3, pull back, drop 3, actually roll the 3, pull back 1, negative, positive 1, positive 1, normal distribution, and then back to the 3, 5, and pull back to the 3, close to 5, pull back to the moving average, gap back up to above 3 ATR, almost at 5 ATR. So that's overextended. But you can clearly see it's been running crazy, right? So I don't even know what I'm doing out here. But yeah, let's see what happens around here, maybe. But that's like I want to run the high. Like I want to act like I'm not, but I want to. All right, leave me alone. Well, all right, how long this been going? 45 minutes, bro. Anyway, like, comment, subscribe. Ask me some questions, comments, or whatever. Call me. Nah, don't call me, because whatever. I may not answer.